Japan made another decision this week that Korea is paying close attention to.
It hiked its consumption tax on Monday, and this decision is expected to have a noticeable impact on Korean exporters. Kwon Soa has more.
Competition between Korea and Japan in the export market may become more heated as Japan raised its consumption tax rate from 5 to 8% on Monday in a bid to gather money for social welfare programs. It's the biggest hike in 17 years. To keep consumption from slowing, the Japanese government also announced a stimulus package. But according to a recent public opinion poll, more than half of Japanese citizens said they would cut spending if taxes went up. Analysts in Korea say less demand in Japan would require the nation to look overseas for markets, which would stimulate competition with Korea. Last month, Japan saw its first export growth in more than a year.
Although the export growth rate is very small at 1.1%, the important thing to notice is that Japan has turned to the positive side of growth.
The automobile component, semiconductor, and steel sectors are those in which Korean and Japanese companies go head-to-head. Because of the depreciation of the yen due to Abenomics, and now the possible shift in focus from the domestic to the foreign market, there are concerns that the Korean export market will take a hit. To counter, experts say Korean companies will have to concentrate on price competitiveness and technical development. However, with Korea's exports growing at a stable pace, even in the face of the weaker yen and the stimulus tapering in the US, it remains to be seen whether Japan will emerge as a real threat to Korea's exporters. Kwon Soa, Arirang News.